Wednesday, December 4th, 2024, Maneco 64, home of alternative economics and contrarian views. There's been a lot of talk in the last month or so about Warren Buffett, how he's sold a lot of his equity position, common stock position, and now is holding a record 325 billion or so in cash and short-term treasuries. And many people are wondering, what does Warren Buffett know? And I think I've found one of the reasons. And if you don't agree with me, comment down below in the comment section or come to my live stream on Sunday at 9 p.m. UK time and we can discuss it. Before I go further, just wanted to make a pretty exciting announcement for those of you who have been asking about when Glint would allow us to buy silver. Well, they do now. And for the viewers in the UK, yes, there is no VAT as long as you keep your silver stored with Glint. Yes, Glint allows its customers to take delivery of gold and silver. And for those of you who don't know, Glint is a way to buy, save, and spend real gold instantly. They provide you with a MasterCard. You can use my promo code if you want to sign up for the Glint app. It's changed to Mario79. It also gives new users a free card delivery worth about $10 or £7.99 for those in the UK. So check all the details below in the description. I think Warren Buffett probably sees that Trump's trade policy of onshoring and reindustrializing the United States, he sees that the biggest victim of that is going to be corporate America. Yes, the big corporations, the CEOs. And I'm going to try to explain to you why I think that is so, even though Trump does say he wants to make America great again, bring back industrial manufacturing jobs to the U.S., get the Rust Belt going again, improving the lot of the working class. And I agree with all that. And I'm not pro-corporate America or anyone. I'm just looking at the facts here and at history and what has happened pretty much since the mid-90s. Since I think you can talk about the mid-90s as when globalization really started kicking off. And I think there was an interview that Sir Jamie Goldsmith did. I think it was with CNN. And he warned about this, about NAFTA. And what is NAFTA? Well, let's start with NAFTA. NAFTA is the North American Free Trade Agreement. So it came into effect on January 1st, 1994. It basically liberalized, it took down all the trade barriers between the United States, Canada, and Mexico. So that was, in my opinion, the first step to helping corporate America. And why would that help corporate America? Well, because American companies could outsource their production. They could assemble goods in Mexico or Canada, bring it back into the United States, sell it cheaper, make bigger profits. And yes, their stock prices of their companies would go up. They would benefit. The only people that haven't benefited, of course, are the people who work in the manufacturing sector. And we can see that from a chart from the St. Louis Fed here. All employees manufacturing in the United States. It topped around just below 18 million workers. And you can see now that the trend is going down. It has kind of stabilized, but we're now at 12.8 million workers. And that's despite the fact that the economy has grown, the population has grown. So that has been the effect of globalization. The other really big event that may put globalization and corporate profits on Wall Street on steroids was the admission of China into the World Trade Organization, and that happened on the 11th of December 2001. And I want to show you a chart of the S&P 500 here, going back, let's say, to the early 70s. And you can see that we had NAFTA taking effect January 1st, 1994. Then we have the WTO in 2001. Look at what the S&P 500 has done since that period. Look at how it really started taking off on January 1995, right? Yes, it has corrected. We have had crashes because of the dot-com bubble bursting, the '08 crisis, the 2020 crisis, and the 2022 correction. But these are just like bumps on the road. But why is Warren Buffett then selling stocks now? Is it just because of the Buffett indicator, which is, I think, yes, 208% now is the market value of all U.S. stocks divided by GDP times 100, of course. That's at 208%, which is 67% higher than the long-term trend line, as you can see here. Is that why he's selling? Probably that indicator, he doesn't like it. But what could trigger a collapse of this measure? What could trigger a correction in the stock market? And not just a correction, but a long-term bear market. Well, I think it's Trump's trade policy of onshoring manufacturing. And yes, in the long term, it would be good because U.S. workers would have better paying jobs. And the U.S. would have to live within its means. It won't be able to just spend, borrow, spend, and buy cheap goods from abroad. The other thing that would happen, of course, is U.S. corporate profits would drop massively, especially the companies, the big corporations that have benefited so much from globalization. And the other way that corporations and CEOs, for that matter, have benefited is that all the tax breaks, all the tax rules and things that you can do in terms of stock buybacks and dividends, they favored a lot the executives, the big CEOs. And you can see here, it's strange as well, and maybe not a coincidence that this indicator here, which is the aggregated CEO to worker compensation ratio for the 350 largest publicly owned companies in the United States. So you can see here that up until really the mid 90s, yes, it was ticking up, but it's really taken off since the mid 90s. And what happened in the mid 90s, early 2000s? Well, globalization. And the last number here is at 344 times. I think it might have come off to around 260 now, but I think that's a symptom of this. And that's why maybe what Trump is promising is just for getting votes, maybe. Is he really going to go through with this onshoring, this trade policy? Because I think it would be not just bad for the dollar and de-dollarization. I mean, we've seen here now that China just announced the prohibition of dual-use items to U.S. military users. So they've put a complete ban on, in principle, to export licenses of rare earth metals like gallium, germanium, antimony, and super hard materials to the United States. I mean, China produces, I think, something like 95% 5% of the rare earth metals in the world. So this Trump trade policy, this trade war that he seems to be fomenting for now, yes, it could all be threats to have a better terms when maybe the U.S. negotiates with its biggest trading partners. I think it could not just hurt the rest of the world, but it could hurt corporate America massively. Their profits are going to drop massively if they have to onshore everything and start producing their goods in the United States. So before I conclude here, just wanted to show you another chart of the largest sources of imported goods. And this is from the Federal Reserve Bank of St. Louis. And you can notice it here as well, that these imported goods from the European Union, China, Mexico, and Canada, it's really started to take off back in the mid-90s, early 2000s. And it matched or coincided with the rise of globalization. So I'm not trying to bash President Trump or President-elect Trump. I'm just trying to look at things objectively here. So I think President Trump's trade policy could be not just detrimental to the dollar in the long term, it could be detrimental to corporate America, to corporate profits, to the stock market, and it could be, killing the goose that laid the golden egg. Am I saying globalization is great and we should continue with it, and to hell with working man and woman in the Rust Belt? No, I'm just saying that there will be, in my opinion, huge consequences to corporate America, to the stock market, and to the economy, and to the whole world. And maybe that's why Warren Buffett is sitting in a huge pile of cash. He can see this coming. So let's quickly look at where the markets are this morning. It's 8:45 a.m. London time. We've got spot gold at 26.40. That's down about $3. The high's been 51 and the low's been 36. So pretty much in a tight range lately, gold. It hasn't really gone too far up or too far down. Silver yesterday had a pretty good day. We got back above 31. Right now we're at 30.85, down about 18 cents. Low has been 81, the high has been 15. The Dow Futures Index is up 156 points. NASDAQ 100 Index is up 94. S&P Index is up 12. Of course, we're waiting for the non-farm data. That's coming out on Friday at 8:30 a.m. Eastern Time. The currencies are pretty steady, with the exception of the dollar versus the yen. The dollar is up about 0.5%, just above 150. Crude oil, that's unchanged. WTI 69.72. And I've noticed here that the 10-year yield is ticked up a bit. It's up 3 basis points at 4.25. So with that, I'm going to wish you all a very good day. Take care. Bye.